The Rebel Capitalist Show.
Going back prior to the Federal Reserve, the government accounted for about 3% of GDP, government spending. Now, prior to COVID, it was around 45% when you include the local governments, and now it's close to 60% of GDP is government spending. So, to your point, if this continues, where's the level where the private sector just continues to shrink and shrink and shrink as far as economic output? And, that leads me to kind of thinking through inflation, because it's not just the demand side of the equation, it's also the supply side. And if the private sector is producing less, then that would lead me to believe that there's fewer goods and services for people to buy, therefore prices going up, assuming that they're continuing with the stimulus or universal basic income.
That is correct. Whether prices will go up depends on a number of factors. But I think in general, I want to give you an example. I know a young man, and he's not the most intelligent person I know. He's failed his school exams, so he started apprenticeship. But he also failed at the apprenticeship, which is quite an achievement in Europe, because in Europe, usually everybody goes on, the apprentice. Some are a bit better and some worse. But to fail is very unusual. In countries that have a socialist mentality, but anyway, he failed. He wrote me, well, I invested in December in Bitcoins. He couldn't open an account because he was too young. But at the railway stations, apparently in Switzerland, you can buy fractional Bitcoins. Instead of buying a ticket, you can buy Bitcoin. And so he bought, and it's gone up 3 times. And then he said he also wanted to buy GameStop. At the time, it was $20. And he couldn't because he was too young and his mother didn't want to open an account for him and so forth. But basically, he did well with his account, you understand? So the guy, he thinks, why should I work? I can make money in stocks. So a whole generation of young people is coming up who are day traders. They don't work anything. They rather stay at home. They go out to the pub or anywhere and they meet a guy. He earns $3,000 a month and they can earn 3,000 day trading a day. They think the guy who works in a job is an idiot. Right. I tell you, you want to destroy a society, print money. This is the worst that can happen. The very worst. And you will see in America, capital spending will be poor because the regulatory environment is so bad against the small businessman. They don't want him. They hate him. The small businessman who is a Korean and Asian, they also hate him because he's an Asian. The Americans, for some reason, they have to link everything. Oh, it's because of Russia. Oh, it's because of China.
You're right.
It's never the politicians that fail.
Yeah, that's a fantastic point. On another anecdotal story that I'll let you know, I've been in the U.S. and now here in Tucson, at least, it is almost impossible to get an Uber driver. Almost impossible, Mark. And I don't know if you used Uber when you were here in the United States 2 years ago, but it was maybe 5 minutes. Almost anywhere you were in the United States,
yes,
5 minutes and you'd have an Uber driver. Now, every single time I try to get Uber, it just says no cars available, no cars available, no cars available. You're lucky if you can get one within 45 minutes, and it goes right back.
Why is that a shortage of drivers?
Yeah, there's just no drivers. No one's willing to work. So,
funny. Yes, this is the incentive. Many people get more money from the government than if they would work. Then they have a disincentive to work.
Yeah, and then to your point, with whether it's Bitcoin or stocks or whatever, we've turned everyone into day traders. I remember I was out at a golf course the other day on a driving range, and it was right next to the local university, University of Arizona. And there was like three groups of young college students next to me hitting balls. So I was kind of listening to what they were saying. Mark, every single group, every single one of them was talking about trading cryptocurrency. Every one of them. That's all they were talking about. And so it's just, I think if people realize that society's wealth is not a measurement of how many currency units are in the banking system, but the amount of stuff that you can buy, the amount of goods and services it produces, then people would realize that the path we're on. But I don't have any hope there for people realizing it. But let's take it back to an investment theme here. Gold has gone down for the last 6 months or so, and I wish it would go down further because I'd like to buy more. And I like the gold miners here because it seems like everyone's just completely forgotten about the gold and gold miners and focused on other things where you can get a 10x return in a week. So what's your view on gold and the gold miners right now for the long term?
Well, what you said is absolutely correct. For the last 6 months, since August last year, in 2020, the gold is down 18%, and gold miners in some cases are down 30-40%. I mean, they had a big correction, and I think at the present time, we had for the last 2 months selling of the two major gold ETFs. So the assets of two major gold ETFs are contracting. That's actually a very good news because it shows gold and silver and platinum are really not in a bubble.
Yeah, right.
They're not in a bubble. Now, someone may say, well, they've had it because of this and that and so forth. But in general, I would say technically, also if I look at the stock prices today, I think they look actually good. And I think they will rally. Now, would I predict that gold will go to $5,000? No. But I think gold and silver and platinum are in a position to have quite a significant rally.
Yeah. Do you think that is predicated upon real interest rates? Because there's a lot of talk that it's all about real interest rates. So if real interest rates are increasing, then that's negative for gold. I actually talked to Bill Fleckenstein about that, and he said that that's not always true. That was his view based on his experience. So what is your experience with the price of gold and real interest rates? Are they directly correlated?
Well, in the 70s, real interest rates were always negative and gold went up. And in the 80s, real interest rates were high and gold went down. And between 1999 and today, interest rates depends how you measure inflation, but in general, they were not high in real terms. In other words, they tended to be negative and gold has done okay. Now, I think a different view would be to say, well, if interest rates are high in real terms, then it's bad for a lot of assets, not only gold. It would be bad for real estate, it would be bad for consumption, it would be bad also for cryptocurrencies. I think the key for gold taking off is that the cryptocurrency craze comes to an end. I'm not giving a view here whether there is merit to some cryptocurrencies. I think eventually the whole world will have cryptocurrencies. But it also means that the supply of cryptocurrencies is going up a lot in future. Now, maybe the one or the other crypto, like Ethereum, and especially Bitcoins, they may become the most accepted ones and the ones that perform best. I think Bitcoins could go much higher. But as long as these cryptos go up strongly, the big buyers of the big potential buyers of gold, silver, platinum will not be there. They have already positions. The outstanding position in gold is large, and they may add a little bit, or like you, they may say, well, I'll buy if it comes down in a final sell-off. I have recently increased my position in gold because I consider it to be an asset of relatively high safety. And I don't trust, the government, and I don't trust the economic statistics they publish. All I can tell you, if you open your eyes, you can see how many businesses have closed. You can think how many will reopen.